Hello, Janice.
Anthony, how are you?
I'm well, and you?
Very well.
Today, let's talk about 5 unexpected ways life insurance can help your family after you die. Another sunny topic, yeah?
Yes. Lovely, but important.
Of course. So this one comes from the pennyhoarder.com. Have you heard of that website? It's a great site.
No, but actually, I love the name.
And this post was written by Carson Kohler. Thank you, Carson. Great article, great basis for our conversation today. Janice, before you start us off, I want to give a little bit of background on, because this is about kind of what life insurance can pay for after somebody passes away. I want to quickly go over the relationship between estates and debts. Is that all right with you?
Absolutely.
Okay. So in most states, actually, I think all states in the United States, your heirs are not responsible for debts that exceed your assets. Okay, it's like you went bankrupt upon death.
Yes.
They can't make you pay if I died with $100,000 in a bank, but I had $200,000 in credit card bills. They can't make you pay the difference. Okay. Now there are exceptions to that rule, like if you co-sign something, if you are a guarantor, and the big problem is student loans have very special rules to them. Student loans don't go away, so there's going to be a problem with student loans on the horizon. I think we all know
Mine are
that.
still not going away.
Yeah. Yeah. Okay, so with that sort of background in mind, Janice, can you cover the 5 unexpected ways life insurance can help your family after somebody dies?
Yes. I like the article because I think it's well written. It starts out with dying isn't cheap, which is unfortunate because you can't even attend your own funeral. But isn't that so true? Like, it is really expensive. So they're talking about ways you didn't realize that your loved ones could use your life insurance. There's a death benefit. Could you talk a little bit about that on the insurance policy? So when you pass, and you can receive the funds from your life insurance?
Sure. Let's talk about the most basic or common type of life insurance, term life insurance. You pay, $10, $50, $100 a month for 30 years. And during those 30 years, if you were to die for almost any reason during those 30 years, then your beneficiaries will receive, I don't know, $100,000, $500,000, whatever you decided to pay for, a big cash payout of just money upon your death that you've paid for. And the reason this makes sense, is because they charge premiums that mathematically make it, based on your likelihood of. I mean, they don't do this if you have risky behavior or if you have poor health. They choose people who are basically most likely going to live.
Right.
So that's how this works out. But if anything goes wrong, if there's any sort of disaster, accident, kind of unexpected kind of thing, then yes, your family will have an influx of cash that you just kind of fill out a few forms and bring a death certificate to the insurance company, and you'll receive a check or a wire.
Which is very helpful because, as he said, it isn't cheap. So they go into different areas that you can use this for. For example, if you haven't paid off your house. So the average American who purchased their home in 2017 with a 30-year mortgage, you've got a lot left. So if your spouse or partner is left with that monthly expense without your income, what happens? But thankfully, with a life insurance and the benefit that comes in, you can use that to either cushion it or pay it off completely.
So when I spoke with Jason Lee a few months ago on this podcast, he did a great breakdown of how to choose how much life insurance you need. And he broke it down as life insurance should be really thought of as replacement income. Right. So if you need not you, but if my wife needs from me X number of dollars per month for the next 20 years to get our kids, through college or maybe through grad school, then what would it take if you sort of dollar cost or do a discounted cash value down to a lump sum right now? What would that dollar amount be to get us to that point? And there's, you do the Excel, do the math, and you figure it out. And like you said, yeah, it can be a lump sum payoff of the mortgage. It can be enough to cover the monthly until, however you want to figure it out. But just do the math and figure out what is needed, and then see if you can afford the insurance.
Right, and you're making sure that, like in your situation, you said the wife, she'll be okay, taken care of. So number two is if you co-sign loans or credit cards. So typically the debt doesn't die with you, as you said, especially if you're a co-signer. The creditors still want to be paid. So depending on the terms, if you have a co-signer, that person's not responsible. So thankfully that death benefit can cover that.
Yep. Very good. I don't think there's much to add to that. You got it right.
Yeah. That's a great thing because you don't want to leave them with that. Number three is if you've racked up unexpected or expected, I threw in there, medical bills. You know how expensive medical care is with or without insurance. It's expensive, especially if you're talking about at the end. Just do the math. They said on average it costs $2,271 per day at an average hospital stay. That's a lot. If you're in there for a few days, a few weeks, and then you pass, think of the medical bill that you'll be left with. So there's no surprise that medical debt's a really big issue in the U.S., but it's nice that if you have this death benefit, this insurance, you can take care of that.
There's also the issue of Medicare and Medicaid clawback. So you might qualify for Medicare or Medicaid depending on your situation and think, oh, cool, the government finally did me a solid and paid off my bills or my dad's bills, whatever the case may be. The thing is, there are certain types of treatments and certain types of services that if they pay for that, upon passing, if there's any money in the estate, they want to get paid back. It's called clawback. It's a great name, right? Clawback.
Right. Kind of sounds a little, but.
So, if the estate is a house and you don't want to have to be forced to sell the house, then the life insurance can really help cover that to make sure that you're not forced to do anything you don't want to do.
So, number four is if you help foot the bills for utility and groceries. You just said this before when you're factoring in how long. You're factoring in your monthly income. For example, you used your wife, and you contribute each month. How much are you talking for grocery and utility bills so they can continue and be okay? So reality is paying the electric bill. Sometimes when you have two people and your income, you don't really think about it. But then when you're left with just one, that is a pretty big burden.
Yeah, I was a little confused by this as a separate bullet point because it seems to be kind of covered under the same principles, at least of the first one,
Yes.
But maybe this is specific to couples or households where they have really, really sort of segregated bills. I don't know how you guys do it, but
we're definitely not where it would say. This would all lump in. I think I agree with you with the first one that you talked about. Same with number 5, lumped right in. If your children go to daycare or college, you have college tuition. You have to think about that. Get a nice round number for what you pay each month for everything, as if you were alive. What are you paying right now? Do the math, and just like your friend had said, and that will help you determine what's right for you.
Yeah, honestly, if you think about this, and Carson, this is a great article. You covered these points very well. It kind of boils down to having more money when you die is good. Would you
Yes.
Would you agree with that?
I would. I actually would even add on that having more money in general is good.
Hey, we're getting real philosophical here. Yeah,
I know, right? It's not a bad thing, but it's seriously, it is right that you want to just make sure they're cared for. And I say this every time, that if you're set up properly with an estate plan with a reputable attorney that knows what they're doing, this is something they're going to help you factor in.
And Carson's right. A lot of these things sort of come to a head when somebody passes away. These lump sum funeral bills, lump sum medical bills, or a sudden loss of income. Life insurance really does cover those gaps.
Yes, absolutely.
Yeah. Are we good, Janice? Anything else?
No, I definitely agree with you that this is really important. It gave me really good stuff to think about.
Cool. Thanks again to thepennyhoarder.com. Thank you, Carson. Great article. And if anyone out there hasn't done their attorney yet, call my buddy Jason Lee. If you don't have his information, just contact us through social or through our website, and we'll put you in touch.
Fantastic.
All right. Thanks, Janice. Talk to you next time.
Talk soon.
Bye now.